What a beat coming in for ITC's PAT. It's come in at 5,090 crore rupees. The 18-hour poll was penciling in 4833. The, of course, key figure is going to be what they clock in terms of cigarette volumes and whether they come at par with the expected range of 13 to 14%. We just have the first flash with us. I don't know, Anisha, if you have more numbers, but we were expecting a revenue uptick of 7%. 4833, like I just mentioned, is the PAT figure that we were working with, and it definitely is a beat. We're also anticipating a good 340 basis point margin expansion, and you can already see the stock actually recover from the session lows.
Yeah, I don't have many numbers at this point of time, but looks like that the gross revenue from operation has come in at 19,058 crores, much better than what we were expecting at around 16,000. But these are the consolidated numbers, I beg your pardon, so I'll have to compare them with the standalone numbers to get the right figures as far as the top line is concerned. But even if I look at the standalone revenue, that's coming at 17,500 crores. We were working with an expectation of 16,624 crore. So big beat coming in there as well. And even with respect to the profitability, as we just highlighted, 5,086 crore is the figure. We were working with a number of 4,833. We don't have other details with
revenue
respect to the volume.
It's just come 16,398. So that's pretty much in line with what we were also factoring in, because we were working with a figure of 16,624 crore rupees. That's largely in line, the top line numbers. But yeah, it's the segmental breakup where all eyes are going to be.
Oh, well, yes, and with respect to the other details, the cigarette figure in terms of the segments has come in at 7,354 crore, and on a year-on-year basis, it looks pretty much flat, to be honest. It's just 7,288 crore that was there last year. So very, very minor bump up coming in as far as the cigarette, revenue is concerned. And even if you look at the other internals, I don't think that they are very positive at this point. And let's wait for the volume figure, and that will tell you of what really panned out, because 7,355 crore worth of cigarette revenue this time, and that compares with 6,443 in the year gone by, and last quarter that number was around 7,288 crore. So sequentially there's not much improvement, but year on year you can definitely see quite a bit of improvement as far as the cigarette volume, cigarette revenue is concerned. We'll wait back perhaps and get more details with respect to the other details, but we have the reactions coming in from the expert as well. Preeyam Tolia, the Senior Research Analyst at Axis Securities, joins us now. Preeyam, hi, thank you so much for making time and speaking with us. First up, the margin figure has come in at 37.8%. The revenue profile seems to be around 16,400 odd crores, and the profitability has come in at around 5,100 odd crores. Your first take on the three key numbers that we have.
Yeah, so on the top line front, it is below our estimates. So we estimated around 8% of the revenue growth. So the numbers are quite miss on that part. However, we believe that on the margin front, the numbers have in line with our estimates. So we have to check on the ITC cigarettes volume part. I don't have the number as of now, but it seems that the revenue growth is below our estimates. So maybe because yeah, hello.
Right, Priyam, we're going to wait by for more numbers and perhaps the segmental breakup as well, and I guess the cigarette volumes, and then try and reconnect with you to analyze the numbers. Let's quickly cut across to the SBI chairman. He's addressing the media after their earnings.
Economic activity would be supported by improving rural demand too. The government thrust on infrastructure spending, revival in corporate investment, healthy bank credit, and moderating commodity prices will also go a long way in terms of supporting the Indian economy. Despite the increase in interest rate and its transmission, credit growth has continued to grow in double digit and has been broad-based across sectors in the financial year 23. During financial year 23, all scheduled commercial banks credit grew by 15% YOY, as against 9.6% YOY in financial year 22, while aggregate deposit of all scheduled commercial bank grew by 9.6% YOY compared to last year's growth of 8.9% YOY. In the Union Budget for financial year 24, several steps have been taken to push up the capital investment in the country, which will eventually boost the credit demand in the country. We expect credit growth to continue in financial year 24 also, although some moderation might happen here and there. In the above economic backdrop, let me now give some color on the bank's number for financial year 23 as well as for the quarter 4 of financial year 23. I'm pleased to announce that for the third quarter in running, we have posted our highest ever quarterly profit of 16,695 crores. For the full year, our net profit has crossed the landmark number of rupees 50,000 crore, which is the highest ever by any bank in India. Net profit for financial year 23 increased by 58.58% on a YOY basis to 50,232 crores, while operating profit at 83,713 crores increased by 11.18%. ROA at the bank for the year improved by 29 basis points on YOY basis to 0.96% and ROE improved by 551 basis points to 19.43%. For the quarter 4 of the financial year 23, net profit stands at 16,695 crores, which is higher by 17.52% sequentially and 83.18% on a YOY basis. Most other core profitability metrics have also improved over previous year as well as sequentially. Net interest income for the year increased by 19.99% YOY on the back of improvement in yields and continued credit offtake. Domestic NIM also improved by 22 basis points YOY. Non-interest income declined by 9.73% YOY, mainly due to the MTM losses which we had booked in the first quarter. It was to the tune of about 7,000 crore. Other than that, our core income streams, that is fee-based income, have remained intact and have improved by 6.84% YOY basis. Operating expenses increased by 13.68% YOY as we have started building provision for the wage revision, which has fallen due from November 2022. There is some increase in overhead expenses mainly coming through higher tech-related expenses like expenses on IT development, mobile banking, ATM, etc. And also the higher DICGC premium because of the growth in deposit. On the business front, credit growth has been robust across all the segments. Domestic advances grew by 15.38% YOY, headlined by retail personal advances which grew by 17.64% YOY, and corporate segment witnessed a growth of 12.52% YOY. SME and agri segment have also witnessed a healthy double-digit growth at 17.59% and 13.31% YOY.